Hello and welcome to State Matters. I'm your host, Matt Muratore. My guest today has been with the Mass Department of Revenue for over 30 years. He conducts Department of Revenue small business workshops for new business owners and represents the department at external speaking engagements on a variety of topics. Please welcome Brian Lynch. Well, Brian, thanks so much for joining us. I really appreciate that. We always start off our show just learning a little bit about our guest. So if you wouldn't mind giving us a little background on who is Brian Lynch.
Okay, I can't tell you too much, Representative, but thank you for the invitation down. I appreciate it. So I'm Brian Lynch, and I'm with the Mass Department of Revenue, and I have been for 33 years.
Yeah, we said that.
Yeah, grew up in Milton, live in Milton currently with my wife.
You grew up in Milton too?
Yes, with my wife and 3 sons.
Yeah.
Went to school at UMass Boston, loved it over there. It's great. Looking forward to going back as a senior in a few years, take some classes.
Really?
Yeah,
Nice.
I understand you can go for at a reduced tuition, significant reduction, yeah. So when I retire, that's what I'll do is go back to school.
Yeah, good for you.
Yeah.
Good for you. Good for you. And so is this been your whole career? Has been at the Mass
Pretty much.
DOR? Yeah.
Had a couple of jobs out of school, but then
yeah.
the Revenue contacted me, and I've been with them for 33 years. So I enjoy it.
What sort of background did you have that actually they called you and said, "Hey, we want to hire you"?
They called me off of a civil service list, if you can imagine that. So civil service lists haven't really been active so much in recent years, in many years. But I took a test. My brother was really big on, let's take this test and that test. So I just happened to take the test.
You never know.
You never know.
I remember being a young kid. I went to bartending school. Somebody said, "Go to bartending school. You know, get your license to be a bartender," because you never know. And I was a bartender for 10 years. So. You know, you just never know, and I keep it up still. You know, you just don't know.
You got to keep your options open.
Yeah, exactly. You never know. When these gigs end, you know, you get something to fall back on. So, so tell us a little bit about the Mass Department of Revenue. So, what are some of the functions?
Well, Mass Department of Revenue, it's a large agency. It employs about 1,800 people. There are basically 3 divisions. Child support is a big section. Tax is also a big section. And then the Division of Local Services as well. So local services is in touch with cities and towns, assessors, and that type of thing. So it's a pretty big place.
And what secretary is it under?
A&F, Administration and Finance is the agency.
That makes sense. Yeah, good. So you recently came to Plymouth to talk about the senior circuit breaker tax benefit. And so if you could talk to people here today on the show, you know, it's amazing to me the amount of seniors that are, the baby boomers, that are turning the age of 65.
Right.
And have been for a few years now and continue to by the droves. Plymouth right now, the population of seniors is almost a third of the population of over 65.
Wow.
And growing.
Wow.
But it always amazes me that there are seniors out there that just don't know about this tax break. It's simple to do. We've had at the Council on Aging just recently when you came, you know, we had about a dozen people there. I was just amazed there weren't more people. So I'm hoping by this show we'll be able to reach more people because we are still in the tax season, so they can take advantage of it.
I think unfortunately related to that, taxes aren't necessarily a favorite topic for a lot of people.
But if you could save money.
Oh, definitely.
Particularly if you're on a fixed income.
If you could get a nice refund from the Commonwealth, why not look into it,
Yeah.
right? But I think people initially don't really understand how it works and why they should.
I think that circuit breaker just the people just don't get that. Talk about what the circuit breaker. That was interesting you brought that up.
It would be nice to rename the credit. Really. If you could call it the senior real estate tax credit, then people would
understand exactly right.
That.
Yeah.
But the person that developed the concept many years ago, they used the analogy of an electrical outlet that is burdened or overwhelmed, and when the outlet is a little overpowered, the circuit breakers activated a trip to provide some relief for the outlet. So they use that analogy with taxes, that when a senior, when they feel a little bit overwhelmed or burdened by their real estate tax, this tax credit is in place to provide some relief for them.
So talk about some of the specifics of that.
Sure. So we know that as senior, the first criteria in order to be eligible is you need to be 65 or older by December 31st of the tax year.
Of the previous, okay.
Yeah, so you could turn 65 on December 31st, you're considered 65 for the entire year. If you are married jointly with your spouse, as long as one spouse is 65 in the tax year, then it's considered that you're still eligible for the credit. There's some income eligibility as well that we should talk about. So if people file single, that qualifying income cannot be any greater than $57,000. So when we talk about qualifying income, I mean gross income to include everything. People's Social Security, a pension, bank interest,
Any
dividends.
annuities, yeah,
Annuities,
dividends, yeah,
any
okay.
distributions from an IRA or 401k, anything really, capital gains. So we really want to bundle all of their income together. And when we look at who's eligible for the credit, a married filing jointly, those folks, their total income cannot be greater than $86,000. And some folks file as head of household because they have a dependent person in their household living with them where they provide more than 50% of their support, financial support. And that qualifying income is $72,000 for 2017.
Okay, and the single rate is 57,000?
57,000, right.
Okay.
The other thing we need to consider as well is the assessed value of your principal home in Mass cannot be any greater than $747,000 for 2017.
Okay.
And
That's
so
pretty high.
I
That's
think
pretty high.
it is.
Yeah.
I think that the eligibility criteria is pretty generous, really, with the married joint return of $86,000, and the assessed value of your property, could be up to $747,000.
I think the average home in Plymouth is about $335,000, $340,000.
Yeah.
So, majority of seniors will probably qualify for
Right.
this if their income met either the $57,000 for the single or $86,000 for the married jointly, or the head of household of $72,000. And so if somebody had had income of $50,000, okay,
Right.
as a single person with a house worth $340,000, what percentage would they get back?
So the calculation for the credit is we would look at 10% of someone's total gross income.
Okay.
And we're going to compare that 10% of their total income to what they're paying in real estate tax, and they're able to add half of their water and sewer bill to their real estate tax paid. By adding half of the water and sewer, we're trying to boost the credit for them and increase the credit that they may be entitled to.
Okay, so in that example, the $340,000 home, the $50,000 income, and their tax bill, let's say, is $7,000.
Okay, perfect. So the calculation, this credit is in place for seniors once their real estate tax, together with half their water bill, is greater than 10% of their total income.
Okay.
So in your example, we have someone with $50,000 income, we know 10% is $5,000. As soon as their real estate tax and half their water bill is greater than $5,000 in that example, the credit is in place and working for them. So in the example, if they're paying $7,000 in real estate tax with $50,000 of income, we know that that's $2,000 difference, right? The maximum credit for 2017 is $1,080, but they would qualify for the maximum. And when we were at the Plymouth Senior Center recently, there was a woman who spoke to me after the presentation.
Yeah, talk about that. That was fascinating.
It was fascinating.
Even though there was only a dozen people there, to me, it made it worthwhile.
Oh, definitely.
Talk about that.
It was worthwhile to me, too. And as long as one person benefits, then I'm happy to educate the people. So the woman, she just wanted to affirm what she heard, in the presentation. So she came up and she said, I'm a retired teacher in Plymouth and have been for many years. She was 80 years old and living on $36,000 of income. And she said her real estate tax was significantly more, about $7,000. And so I said, wow, you're qualifying for the max. I mean, you're maxing out at $1,080 because 10% of $36,000, $3,600, $7,000 in real estate tax. You've way exceeded the $1,080 limit.
But there was something more to that, though.
There was something more. You're right. Thank you for the reminder. So not only she just learned about the credit when we were there, and she's also eligible for the prior 3 years as well. So there's almost like an open window where people, if they weren't aware of the credit, they have the opportunity to go back the prior 3 years and file for the credit, which was her case. She wasn't aware of it. So she's able to go back and amend or correct her state tax return and file for the credit that she didn't claim previously.
Yeah, I thought that was huge.
Yeah.
And afterwards, talking to a few people as well, most people will go to tax preparers to do their taxes for them.
Yes.
And they were wondering, why don't tax preparers know about this?
How could someone overlook it?
Yeah.
This credit has been in place since 2001.
I was going to ask you that, since 2001. Okay.
Yeah. So it's been around for a long time. And from my perspective, of course, I work for the tax agency, but from my perspective, any tax professional or someone that does taxes for a living should be aware of the credit. It really should not be a surprise to someone. Maybe someone that's not so savvy with taxes and doesn't do, a lot of people, they just fill out the return once a year because they have to. But if you would do it as a profession, you should really be aware of the credit. You know, it shouldn't be a surprise to you.
Yeah, and I know at the Center for Active Living, they have folks who are from AARP that actually do the taxes, so they are well aware of this when they do the senior taxes.
That's a wonderful resource to have volunteers from AARP. They're trained by the IRS as well as the Department of Revenue. They use equipment that's provided by the IRS. They use computer equipment from the IRS. They work together, so someone will prepare the return. If you prepare the return, I check your work. We always work together. Very competent, knowledgeable people. It's a great resource for people in Plymouth. Not all centers for living have that benefit of having volunteers.
Right. Yeah.
I was in Rockland recently, and unfortunately, they don't have a volunteer from AARP.
Oh, that's too bad.
Yeah.
Yeah.
So, and there's a lot of towns that are limited like that. You know, with anything, to find a volunteer, it seems to be getting more difficult all the time.
Yeah.
You know?
Well, we have a section of town called the Pine Hills, which is a older, 55 and older community, and so there's less retired people, semi-retired. A lot of them are really helping out in the community an awful lot more. So.
And most of these volunteers that do the returns, they come from a financial background. They were in banking or insurance or taxation even.
Yeah.
You know? And they enjoy, basically, they just enjoy helping people.
Yeah, right.
That's why they're there.
Right. And are there any exceptions to why somebody wouldn't get this tax credit? I remember you talking about maybe state employees who don't pay into Social Security or something.
Okay, sure. When we talked about the gross total income calculation, sometimes there's a little bit of confusion because the state doesn't tax Social Security. We also don't tax public pensions, someone that's retired school teacher, police officer. So those public pensions are not taxed by the Commonwealth. It's a contributory pension. So sometimes people feel that if they might say to me, I haven't had a need to file a state return in years because my income is not taxed by the state. And I try to explain to them, well, don't count yourself out doesn't mean that you're not eligible for the credit. And if the numbers work for you, then you're still entitled to the credit. The nice thing about the credit is it's refundable. And what I mean by refundable, anytime we are able to get a tax credit, we always take the credit and apply it to our tax liability, trying to bring our tax liability to zero, hopefully. In most tax credits, once you wipe out your tax liability, that's as good as they get, and that's kind of the end of it for most part. With Circuit Breaker, because it's refundable, if there's an excess credit that you don't really need because you've already wiped out your tax and brought it to zero, you're going to get that amount refunded. And with the example of the public employee that's retired and doesn't pay state tax, if they're eligible for the Circuit Breaker credit, they will have that amount in full refunded.
So they should still file the state tax then, even though they're not going to have any income, they'll have that.
Exactly. The only way to receive the credit is to file the state tax return. And because tax people have a form for everything, so we have a form specific to Circuit Breaker. And on the Schedule CB is where you would do the calculation. We'd ask you to add in your total income, add in your Social Security, take 10% of that amount, compare that to your real estate tax together with half your water bill, and that would determine how much of the credit you'd be eligible for.
So in the scenario, the example we gave earlier with the 50,000, the 7,000, and say that person actually owed taxes without all that about $700, they can actually then deduct the Circuit Breaker from that $700 and get $300 back.
Exactly.
Approximately.
Exactly. Yeah. So let's say that if their Circuit Breaker credit was going to be $1,000, and that once they filled out the state return, their liability was going to be $700. They're able to wipe out that $700 liability altogether, bring it to zero, and get a refund of $300.
Now, this isn't just for homeowners either. People who are renting?
Exactly. So renters are eligible as well too. The income eligibility for renters is the same dollar amounts we mentioned, single under 57,000, married joint under 86,000. And the 10% measure is the same as well. We're going to look at 10% of someone's gross income, and we're going to compare that to 25% of the rent that they paid for the year.
So does it include subsidized rent?
Okay, good point. If people are in any type of subsidized rental arrangement,
Like a senior housing?
exactly,
Yeah.
they're automatically disqualified or not
Okay.
eligible
Because
for the
they're already
credit.
subsidized?
Yeah,
Okay.
it's looked at like they already have a benefit
Okay.
with the rent has already been reduced.
Okay.
So,
So this is just for people who actually just rent outside?
pay market value,
Yeah.
market value rent. Yeah.
Okay.
And the rents have gotten expensive recently,
Yeah.
right, as well
Yeah.
as the real estate tax. So, we really can't discount the renters because it really works for a lot of those folks
Mm-hmm.
as well too.
So it's the same, what you started to say, there's 25% of the annual?
Yes, so we would once, if 25% of someone's rent is greater than 10% of their income, then they would be eligible for the credit.
Okay.
So let's say if someone was paying $1,000 a month in rent. For 12 months, there's $12,000, 25% is at $3,000. As long as their income is under $3,000, they'll be eligible for the credit.
Okay.
It seems a little tougher for renters because you sort of need high rent and lowish income, but some people are paying rent from their savings because the rents have become so expensive. So it's possible that people would qualify and be eligible for the credit.
Right. Now, you had some numbers earlier that you
I
talked
did,
about.
yes.
Do you have those numbers that you can give us?
I do. I should have brought them. Last
I didn't
year,
want to put you on the spot,
No.
but I kind of remembered what you said.
I'm glad
If
you
not-
brought it up. Last year in Plymouth, 963 taxpayers took advantage or benefited by the circuit breaker credit that we're talking about today.
Okay, so that's in Plymouth, 963.
Yeah, almost
Okay,
1,000
seniors.
people,
Okay,
right?
okay.
And the
Out of
average,
the about 16,000, 17,000 we have, so okay.
so that's why we're doing the publicity,
Yeah,
right?
right,
So,
right.
we know that more people are eligible for it,
Absolutely.
but aren't utilizing,
Yeah.
they're not benefiting by it, right? And the average credit in Plymouth was $890,
Okay,
right? So pretty good.
yeah.
So the total funds that went to Plymouth last year were $857,000.
Wow.
So pretty significant.
Yeah.
And this is funded by the legislature.
I was just gonna ask you that, yeah.
And thank God that the legislature provides the funding for this every year.
Mm-hmm.
Statewide, $75 million was sent to seniors who needed the help with their real estate tax last
So
year.
is this a line item at the state budget?
It is,
That
yes.
gets funded, does it get funded for the exact amount, or does it get funded higher, or?
I believe that the funds are there. They must know from the prior
Prior year
years.
what it would be, yeah.
And maybe provide like a little increase,
Yeah.
as you say, like the population's getting a little bit
Yeah,
older, and more people are becoming aware of the credit and filing for it. So I think that's how they do it.
I remember at the senior center, there was the Center of Active Living. I'm trying to get used to that name. They actually,
I like it,
They
though.
actually, what I found out just recently is the Boston Globe is doing an article on the Plymouth
Wow.
Center for Active Living because of the model that they're changing from the old senior center or council and agent to the Center for Active Living. So
I believe it, because
Yeah.
it was a beautiful place. I'd never been there before.
Yeah.
We went the other day, and beautiful place, very active. There's a lot
It
of
is, yeah.
action, and you
Yeah.
could tell that a lot of activity and different things to do, people coming and going, great staff, very friendly,
Yeah.
and really
Yeah.
beautiful
So
spot.
it's really trying to change the model of seniors and because they really are active. They really are.
Definitely.
But there was a question that came up about the book you had, and one gentleman brought up about the in the mass.gov e-file book, the resident income tax red book. It actually had some language in there that indicated that this money would the maximum credit will go up every year.
Right.
Can you talk about that a little bit?
Sure.
How does it actually either go up or not go up?
Yeah, I think the design of it is there's like a cost of living increase
Okay.
that's built in, that they know that maybe people's income increases a little bit every year. So those income amounts are designed to increase a little bit to kind of keep up with, again, the cost of living.
Okay.
I believe that's what he was referring
Yeah.
to.
And some years it goes up, some years it doesn't.
Exactly, right.
It doesn't look, it looked like it went up a little bit from 2016 to 2017 for the maximum credit.
Yeah,
But the income eligibility kind of stayed the same.
Right. In recent years, it seems like the income amounts have leveled off a little bit, but maybe for 2018, we might see some increases there.
Yeah. Talk about the septic issue, the septic
Sure.
credit that you were
Okay.
talking about.
Yeah, so, since we're talking tax credits, we probably should, alert people that.
That was interesting when you brought
Yeah.
that out, yeah.
The Commonwealth of Mass also has a credit for people that need to replace their septic system or has failed Title V, or needs to be, that maybe their septic system needs to be repaired. So anytime you get into septic work, we know it's very expensive. So this credit is in place to try to offset some of the costs. And this credit has been in place since 2001 as well. So it's been around for quite a while. The calculation, the nice thing is you don't have to be 65 to take advantage of it. So it's open to all
Anybody.
homeowners, right? And what we would look at is the first $15,000 of expense of septic repair, which I have unfortunately had to run into that, but I think
Yeah, they're usually like 20, 25,000,
it doesn't
I think.
take, that's not unusual to be more than $15,000. But we would look at the first $15,000 of expense and take 40% of that amount, which would give us $6,000. The $6,000 credit, if you're entitled to, and you had that expense to replace your septic system or repair it because it had failed, or even if you're required to tap into the town sewer system, perhaps you're going from septic to town sewer, this is available to you as well. You would have a $6,000 credit, but this credit has to be spread out. You can only use $1,500 a year, and it has to be applied against your tax liability. This credit's not refundable. So it's a little bit different than the circuit breaker, because circuit breaker is refundable, but the septic credit can only be applied to offset your state tax liability. And you'd have 5 years total to try to use that $6,000.
Okay.
So maybe when I did my return, if I was going to have a state tax liability of $2,000, now I have the septic credit of $1,500 that I can apply, and I would only owe the state $500.
So how would it work? Because we have sections of Plymouth, small sections of Plymouth that have the ability to tie into the town septic system,
Right.
sewer system. So how would that actually work for them to do that?
If they, I believe it's in the wording, it says if they're mandated. So
They're mandated, okay.
If they're required to convert from septic to
Okay.
the sewer line, then they'd be eligible to do for the credit.
For the same $1,500
Exactly.
for you?
Yes,
Okay.
yeah.
Okay.
And once again, there's a specific schedule specific to septic credit, so it's Schedule SC. So if people need more information about the septic credit or the circuit breaker, I believe our friends here at the cable show will provide the website
Yep.
for the Department of Revenue, and we also are going to provide them with the 800 number.
Great.
So they could call and talk to one of our agents. We're happy to speak with them about these credits or any other tax
Yeah.
issues that they might have.
The sewer credit is really timely here. We've had a major
good.
sewer break here several, probably a year and a half ago now, and so it's up and repaired. But there's a lot of discussion about trying to get more people on the line. So
Yeah.
so we'll see. But it's good to know that information is out there.
It is, and it's
Yeah.
probably another hidden credit
Yeah,
that people,
right,
I mean,
right.
how often do you run into that? Not very
Right.
often. So
Right.
I'm hoping that some folks out there will benefit, be able
Yeah,
to
yeah.
utilize that.
It's interesting. Both of these started in 2001.
Mm-hmm.
What happened in 2001 that kind of precipitated these things to come into play?
I'm not sure. That's a good question. I haven't, I'll have to research that.
Yeah,
and
I'm
what prompted-
just curious.
yeah.
Just
Why 2001?
yeah,
Yeah.
yeah. Times are good then too, if I
I was going
remember
to say that
correctly.
there must
yeah.
have been a few more dollars around.
Yeah,
maybe.
probably. Yeah, exactly. So part of your other role is that you offer workshops for new businesses.
I do, yeah.
Can you talk about that a little bit?
Sure. So I've been with the department for 33 years, worked in taxpayer service. I've answered the phone, been in person when people come in with their questions and problems. And currently I work in employee training, so we bring in new hires. We have seasonal help that helps us out. So I'm involved with
Seasonal help being this time of year?
Exactly.
In the winter months? Yeah,
Exactly.
yeah.
So folks maybe that will come and work for us for maybe 9 months during tax season.
Okay.
And it kind of overlaps because it's almost like there really is no tax season anymore. It's just kind of year round.
Yeah,
It's
true.
constant. So, but training and educating those people kind of get them up to speed. Also offer a class. It's called a small business workshop. And that's for people that, it's really designed for someone that's thinking or has recently started their own business and kind of educate them about how their income tax is a little bit different if they're going to be self-employed, filing a Schedule C for both the federal and state. That's where Schedule C is where you can take your expenses and all those things related to, it's costly to get going. So we talk about how your income tax is a little bit different. Then we'd get into maybe sales tax. A lot of people sell a product. So what's taxable, what's not, how to register with the Department of Revenue. People would have a requirement to collect sales tax if they're making retail sales in mass, and how to remit that. So it just really the design is, it's very informal and casual. Just try to take the mystery and the anxiety out of all this tax stuff related to setting up a new business.
And you do these in your office in Boston? Or
I
you
do
around?
them throughout the state, so different locations. That's posted on the website as well. So I try to canvas. I'll do north, west, south. Try to get around a little bit and make it easy for people. I think it's difficult for people to get into the city. I'd rather go. It's easier for one person to go and speak to a group than drag everyone into.
That's terrific too. Now, do you go to like Chamber of Commerce buildings?
I have spoken to Chamber of Commerce. It seems like the chambers, those folks seem to be a little bit more established, I think, and probably working maybe with a tax professional, although not necessarily all the case. But the workshop that we're talking about now is really designed maybe for more someone that's kind of saying like, I think I could make some money at what I do. You know, so maybe I've had a hobby, or maybe I've lost my job and I'm forced to do something different, and I have a skill or a talent that I'd like to pursue, and I'm good at what I do, but I hate taxes, or I'm not familiar with all of that government stuff, and so that's kind of really who we try to help out.
And so where do you hold these? At hotels, or where do you hold these events at?
The public libraries are usually awesome.
Okay.
Yeah,
Okay,
libraries
so
great. They have beautiful conference space. They're usually very receptive. There's parking. They're great.
Just do small businesses really try to do their own tax stuff?
I think people initially, and a lot of people, even though you may hire someone to do it for you, people really should understand what's involved, and because ultimately it's their responsibility. So although I may hire someone to help me out because it's my business, and if I'm not doing what I should be doing, then I'm going to be responsible for that.
You should be knowledgeable.
Yeah, so people should be aware of that, And I think people say, well, maybe I can give it a shot. And maybe after the workshop, some people say, this isn't for me. I'll just hire someone to do it, you know?
Yeah, because you're just dealing with the state.
Yeah, we talk a little bit about federal, because a lot of Massachusetts tax law follows the federal. So some things, especially like for people that are self-employed, again, with the Schedule C, that's where they take their expenses related to their business to determine their profit or loss. So, and it's not unusual in the beginning to maybe have a loss in the first year or two. It takes a while to maybe make some money.
Sure.
And sometimes I think people are concerned about that, that they're afraid that if they have a loss that they're going to be subject to audit, which is not necessarily the case. Like, we understand it takes a little while to get going. You can have a loss in the beginning, but it can't go on forever and ever. If you have a loss for too long, the IRS will let you know that you really have a hobby, you don't have a business. Right,
there you go. Well, we're going to end on that note. So I want to thank you so much for coming aboard, coming to Plymouth.
Sure.
And hopefully we'll see you back here again, maybe one of those workshops.
I'd love to do that. That's great.
So thank you, Brian,
thank
very
you
much
for the invitation.
Appreciate that.
Appreciate it.
We hope you enjoyed today's show and found it very informative. Please help us spread the word about the Senior Circuit Tax Credit during this tax season. Thank you again to the staff and volunteers at PAC TV for another great show and for all they do. We'll see you next time on State Matters.